Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, September 11th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Again, we've continued to see the ES stair-step higher pretty much month over month here for the most part since the spring here. Very good channeling behavior overall. Typically speaking, at the beginning of the month you pull back to the pivot range, and that could be an opportunity for bulls to defend and squeeze yet again to new highs. But at this moment right now, price is kind of heavy in this zone right here. Usually you'll see price drop into the pivot range but see some sort of rejection and maybe start to push out of that range. We haven't seen that yet. Instead, we've come into it and we've spent 4 days now inside that range. And again, anything can happen here, but if there's any failure to hold the midpoint, that line right there, the midpoint of the previous month's range, that's what opens up a return back toward the 2791s. And so again, this is the key level to watch here. We could still drop into it and find some strength, but again, if there's any failure to hold that level, it could be significant. And we all know about the 2878 half level. That's the key level, the top of the key range. And again, any failure to hold above that level in general, even if it's a month later, could be significant for wider implications of a pullback. So again, we're right up here at the top edge of this larger range, and if bulls do not come in to defend this zone, we will see more of a pullback of some magnitude. Is it just to recent support back to this zone, or do we come back to the middle part of the larger key range? Again, anytime you're outside the key range here, the top of that range, you have to make a decision. Either price is going to continue out of that range, or it's going to reject and fall back into it. And right now we're sitting right around that 2878 half. We continue to hold below 2900. It's still an either way right now, and given the trend, I still give it 60-40 that it continues higher right now. Just because we're at the edge, that's where rejections can occur. So still watching this right now as it continues to develop, but at least we have the key levels to watch as we move forward. Here's a look at the NQ. Now the NQ has been a bit more weak than the ES in terms of the recent pullback, but overall it's been more bullish than the broader market, continuing higher. Here's the key range high from earlier in the year, and right now the ES is about right here, right? It's right there. And back earlier in the year, I mentioned if we can't stay above that level, we rotate back down, and that's what we saw happen. So again, this is kind of where we're at in the ES, but the NQ is well beyond that level. So tech has far outpaced the S&P, obviously, and right now we've gotten more of a pullback to show for it as well. Additionally, the midpoint of the previous month's range, right there, that's the level. And you can see right now the market has been very heavy, sitting at and around that level, closing below it 2 days ago, below it again today. Again, failure to hold that level right there opens up a move down to this line, which is 72.14 half. That's a key level right there. And again, failure to hold or any failed new highs. Say price pushes above 7,500 and fails, that could be a selling opportunity for a push downward. So right now, 7,500 continues to remain intact. That's the level we've been watching since last week, and right now continues to hold as resistance at the moment. So again, 7,500 a key level. Failure to hold or get back above that level could suggest more downside, especially as price continues to hold below the midpoint of the previous month's range. Now, taking a look at crude oil. Crude oil had a failed new high yesterday. It wasn't the easiest failed new high we've seen, but eventually it did finish the day weak. The midpoint retest here today in a downtrending market, this failed new high typically leads to another round of weakness, and so this could offer an opportunity here to sell this thing for a push back towards 64.30. I mentioned before that the 66.30 was a likely target from these highs, but we're already very, very close to getting to that level already. And given the failed new high here, that opens up more downside ahead. So we could certainly see this thing continue lower, especially if price cannot reestablish acceptance back above recent highs here, above 68. again, that could open up much more downside, and we're retesting 64.30 very quickly. So again, this could be an aggressive sell-off here given the failed new high yesterday, so keep that in mind. Now if you look at something like heating oil, very similar as well. You see the major rejection up here at the previous month's high, taking the previous month's close offer, dropping down, and then pulling back. Here's a failed new high yesterday. Inside day with a retest here. Does that lead to another round of weakness as well? That could very well, and that could lead you back toward the breakout point here at about 2.14. So that could be the next target down given this failed new high. So again, energy right now showing signs of weakness. Looking at gold, again, gold has been coiling up. It has tried to hold after the recent bounce. It has held at 1190 level, which is a big key level here in terms of market structure. But you can see it really hasn't done much since then. It's consolidated right around the 1200 level. And again, I've mentioned before that you know, with these bulls here coming in to defend but not getting paid, the downside stops could be at risk. So anything below 1190, a failure through that level could open up a push back through recent lows and retest of those lows. So that could be significant looking forward. Lastly, let's take a look at the Russell. Here's the Russell 2000. We've talked about this one before here. Last week we mentioned the top of this key range here. Very important key range, and price was pulling back and bulls were trying to defend it for a shot higher. But on this day right here, price closed below that midpoint, and now we're back below 1720. You can see bulls are trying to defend it from above. Again, this looks like bears are defending for a shot at another round of weakness. That could take you as low as 1676, the midpoint of that key range. And so again, keeping an eye on 1720 right here. That was a level last week to watch. Price fell back below it and has now been holding it as resistance to start the week. That could offer much more selling pressure ahead. So again, watch 1720. Failure to hold that level could be very significant as it's already begun to reject it. All right, that is it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.